So before I start, whatever we have done in the morning, that GST impact on manufacturer, service provider and trader, you have to pick up important tag word in GST where you will find impact is coming either on manufacturer or service provider or trader. First, we have to understand what is the meaning of supply. Second, we have to understand the meaning of chargeable section in GST. Levy of GST on supply of goods or services or both. Then we have to understand meaning of valuation, on what value GST going to be applicable. Next, you have to understand meaning of time of supply, which is point of taxation. Even though supply is not made, but still GST applicable. And transactions are prescribed under time of supply. Then we have to understand the meaning of place of supply, as we are discussing several points of time, that what is place of supply. Even though goods has not moved out from West Bengal, in the example of bill to SIP 2, still IGST applicable. So place of supply is very, very important. Make my trip. Then we have to understand the meaning of GST input tax credit. They are talking about seamless flow of credit, no denial to it, but still there is negative list. You pay GST, still credit is not available. Apart from 5 specified petroleum product, alcoholic liquor for human consumption, and power sector. That will continue with the existing regime, of which no credit would be given in GST regime. Cascading will continue to this extent, and GST input tax credit negative list. Having said that, then the procedural aspect, and why I am telling you these tag words are the backbone for impact analysis. Your registration, your invoice, how to raise invoice, debit note, credit note, receipt voucher, refund voucher, payment voucher, delivery challan, then payment of GST, how to be done in GST regime, followed by my return filing, GSTR 1, 2 and 3. Let me tell you, there is a voice, and concerning voice, that 3 return per month is a must. But virtually, if you look at what is the important for any taxable person to upload invoice particulars pertaining to outward supply, which is called sell, which gets auto-populated for the buyer. So buyer is not making any purchase entry, except add, modify, delete or pending. It's auto-populated. And once your outward, inward is uploaded, your consolidated GSTR 3 is being created by system only. So virtually, I looked at GSTR 1 is very important. Otherwise, everything is coming in a process except when we need to add, modify, delete or pending. So maybe hue and cry pertaining to 37 return, but it has got automated process. Maybe impacting to SME and MSME sector. But this is what the preparation required to be. And the last and foremost, of course, we understand a lot of open issues are still existing today for GST taxability, but we have to get into such transaction and understand those transactions in crystal clear terms so that we can identify taxability in black and white manner. Otherwise, dispute will remain, and the other person is going to question, and as you are asking, how he got the refund, which looks like to be not possible, right? That is the reason you are interested to know how he got the refund. Officially, whatever question posted to us, we have responded back, and I stand for it. If he is a commission agent for supply of goods or services stationed in India, he is intermediary and falling under Rule 9 of POP and under Section 13 as a location of supplier. Service tax applicable, way forward GST applicable. This is what the provision existing. You can go and check it by yourself. So do not get into that debate part, how he got the refund, but whatever legal provision I have communicated and sounded. Now come to the important preparation and transition provision, which is important today. Important today. Then I can do 10 case study with all of you, and these 10 case studies are immediate preparation. We have to really prepare well. If you don't prepare now, you may end up having opportunity cost. So this preparation is a must for all of us together. The first one, migration. If we are existing registered under excise, service tax and VAT, Section 139 says department going to issue a provisional registration certificate to me. But migration is going on. Provisional GST number is already being issued. That would be your final GST number. But you may have challenges that you have not put your correct HSN code. You have not included all the premises. Or you wanted to put photograph of Mr. A. You have put photograph of Mr. B. Wanted to give PAN number of someone for the firm. You have given PAN number of director. There are lot many hue and cry. Don't worry about that. 25th of June stated to be window is opening up. And this window is opening up for doing all correction and amendment, even the new registration. You know, if you are not taxable today, because I'm a service tax consultant and my turnover is less than 5 lakh rupees, I'm not registered in service tax. But I'm doing interstate, Delhi to Gurgaon, then 20 lakh criteria is not applicable for me. Even for rupee 1, I have to take compulsory registration. Am I supposed to wait till 1st July? So they have understood this aspect. That's the reason they are opening the window on 25th June. Even for the new registration, you can take new registration in GST. And that is the reason corresponding provision in GST got notified. Otherwise, they are not allowed to do registration part. They can't do that. Just because to supplement, to provide a legal backing, they have notified certain provision of CGST and IGST so that they can start this activity from 25th of June. So rest assured, no problem will come. But now when you're doing amendment, the first task would be, you should analyze yourself. You should look at your FG, finished product, or your final services. Look at corresponding HSN code and SSE, because that need to be inserted in your registration certificate. Put appropriately. Do that analysis. Additional place of business. If you want to include appropriately with the address given, so that you avail the credit of GST on any input or input services procured. So these are the immediate take pertaining to migration. Coming to the second case study. If I'm existing registered and I'm excisable cum VAT dealer, then I would be maintaining SANVIT credit balance for my excise duty and service tax paid, and I'm maintaining my VAT recoverable under the VAT regime. What happened for my this SANVIT credit balance and the VAT credit balance? So what happened for this balance lying on 1st July? Provision says, Mr. Jain, your SANVIT would be converted as carry forward as CGST and VAT credit would be, but with three conditions. The first condition, it should be eligible in GST law. It should be eligible. So there may be a case that you have availed Sandbet credit because it is eligible in Sandbet credit rules but not eligible in GST law. Even though you are having balances, but you can't carry forward till the time it is eligible in GST law. Take an example, what could be? Input services. You take food and beverages, right? In the name of sales promotion. Sales promotion is allowed in Sandbet Credit Rules 2004, but food and beverages is not allowed in GST law. Club membership. Allowed in the name of sales promotion in Sandbet Credit Rules, but not allowed in GST law. Input used for generation of electricity. Allowed in Sandbet Credit Rules, but not allowed in. So you can't carry forward as such. You have to really dig and check content of input and input services and then identify whether eligible in GST law or not. First part. Second part. Second condition says that you must have filed your preceding 6-month return prior to 1st July 2017. So it's a condition that you must have filed. If it is not filed, you can't carry forward. There may be a case that you got recently registered in March. How you will be filing 6 months return? No answer in law, but logical answer could be you file your 3 months return. And third condition says it should not be related to the manufacture of exempted goods, exempted by way of exemption notification. So this credit cannot be carried forward. So this carry forward will not be like a simplistic way. We have to do the preparation. And I give an example what preparation we have to do for carry forward in GST regime. Case study number 2. Case study 3. I have got the capital goods. And capital goods credit criteria is 50% in the year of purchase, 50% in subsequent year. So you may have availed credit by 31st March 2017 and balance you are carrying forward. Or maybe a case you have procured in Q1 of 17-18 and balance is carried forward. So what is standing on March 2017, you can take credit on April 1. So it will automatically reflected in your Sandbet credit ledger. Problem lies only when capital goods procured in Q1 of 17-18, 50% unavailed credit. Whether this credit can be availed in GST regime, answer is similar provision under SGST also. It's not like I'm only talking about CGST. Similar provision exists in SGST also, but with a condition. It should be eligible in both existing law and GST law. Again, you have to go back and check that what is eligible in existing law and what is eligible in GST law. Take one example, Rule 2A, capital goods. Any capital goods installed outside the factory for generation of electricity. Credit is available today, but that credit will not be available. Any motor vehicle used for renting of motor vehicle. So I'm giving you the example, even though credit available in existing regime, but might not be available in GST regime. So it should be eligible in existing law and it should be eligible in GST law. Now coming to the fourth case study. What happened input and input services in transit? Maybe a case, I am not going to stop my business. I may have procured some inputs which is starting from Bangalore to Delhi and Bangalore supplier has charged excise duty and CST. Am I right? So what happened? I am receiving these goods on 5th of July 2017, which is having excise duty and CST component. First question, can I get CST credit? Big no. Because we are not carry forwarding and CST credit is not available. Can I get central excise duty credit? Answer is big yes. But what happened? two conditions. So nothing is coming free, coming with a condition. What are the two conditions stated to be? Supplier must have paid the taxes, excise duty and GST. And second condition says, recipient, you must book this transaction in your books of account as purchase within 30 days from the appointed date. You have to book it. Within 30 days, if not possible, then 30 days further extra granted with the commissioner approval. So 30 plus 30 days. And how we will ensure the supplier has paid the taxes? Big difficult task. We have to create one certificate and we have to send such supplier, that supplier must give certificate to us, to whomsoever it may concern. This is to certify that I have supplied so and so goods and services, wide invoice number so and so, dated so and so, on which this much credit, this much liability was created, which is paid by tax challan number so and so, dated so and so, attached herewith, or by debit entry number of my SANVIT, or VAT as the case may be. It is for your records and information. Take this certificate from such supplier, so that you are relieved of that he is undertaking the responsibility of paying the taxes as per due date. Am I clear to all? So this is in transit for input and input services. What happened for his capital goods in transit? This was the question he was posting to me. If capital goods in transit, what happened? Whether credit would be available? Credit will not be available. Law is not there. And Honorable Supreme Court will read only four corners of law. So credit not available for in-transit capital goods. So you should pause your procurement and purchase of capital goods in midway of 1st July 2017. No choice left. Either you should procure before or you should procure after. Going further, you know, under service tax, there's a provision that you can avail credit. If I'm charging service tax, on accrual basis, you can avail credit on accrual basis, provided you make payment within a period of 3 months from date of invoice. If you don't pay, you have to reverse your credit. Am I right? When you have to reverse this credit, so let's say on 30th June, you have to reverse certain credit on account of non-payment of service tax within a period of, along with consideration. For non-payment, then this reversal is made pre-GST scenario, but you are making payment in post-GST scenario. Question will come, can I avail credit of reversal of credit already made? Answer is, yes, possible, but with a condition. And what is the condition? Provision says that this particular payment must be made within 90 days from the appointed date, which is 1st July 2000. So you have to make payment by 30th September 2017. No choice left. No choice left. So now you cannot prolong beyond 90 days. You have to make payment so that you can avail credit. Immediately you have to work it out. Let's move to the next component and next case study. Before touching next case study, let me touch base GST input tax credit normal provision. You have seen under supply of goods, there is no such time period. Supply of goods case mein koi time period is not mentioned. There is no time period prescribed. But in GST input tax credit, there is a condition now, whether it is a supply of goods or supply of services, payment to be made within a period of 6 months from the date of invoice. If payment is not made within 6 months, then we have to reverse credit, and we have to reverse along with interest. And you can take your credit back, but interest is a cost. So that is a normal GST ITC regime. Transition I have already communicated. Coming to the next case study. What happens if you are centralized service tax SAC? You got 29 offices in 29 states, but you have taken centralized registration in Delhi and you are filing 2 half-yearly return in Delhi location and availing whole credit in Delhi location. Post GST, we have to move from centralized registration to decentralized registration. And why we have to move? Because the thumb rule says, सर मेरे साथ हैं आप, कोई क्वेरी आप मुझे बिल्कुल पोस्ट करें. Thumb rule says we have to take registration in the state where from we are supplying goods or supplying. Look at this concept, is very interesting one. GST is a destination-based consumption tax. But for registration, I have to take registration in the origin state. Are you getting it? Registration I have to take in the origin state, otherwise GST is going to be a destination-based consumption tax. If I am supplying from Delhi to Gurgaon, Haryana will get the SGST component. Delhi will not get. But registration I have to take in Delhi. My all adjudication and assessment would be done by. So there may be issue under adjudication and assessment. The Delhi VATO will say, Mr. Jain, is not a IGST transaction. It's an intrastate transaction. And why he will say intrastate? To get the Delhi SGST component. So there may be a fight between Delhi and Haryana only on this point, whether the transaction is an intrastate or interstate. And this we have to face before our tax officer to convince him, my transaction is an intrastate or interstate. So this is going to play a very important role. And touch base, if you treat your transaction as an intrastate, then you must have charged CGST and SGST. Right? But tomorrow, after 2 years, department comes back and they say it's an interstate transaction. You should have charged IGST. But what we have done, we have charged CGST and SGST, collected and deposited. After 2 years, department coming back and saying, Mr. Jain, this is the IGST transaction. You should have charged IGST and paid IGST. Next question will come, can I adjust my CGST and SGST, which is already deposited, towards IGST? Answer is big no. So what happened? I have to pay IGST and go for refund of CGST and SGST, and we all know how refund comes. So apart from the adjudication and assessment, it is also important, equally important for us to determine my transaction is a intrastate or interstate. And this can be more interesting if you look at from place of supply perspective. You are having factory in Delhi, but I'm Gurgaon based client. I'm coming to your factory and taking X works transaction. X works. I'm picking up the goods from your factory only. Or it is FOR destination. You're delivering the goods to Gurgaon location. Now you have to determine whether this both transactions are intrastate or interstate. Both the answers are interstate. But how it would be? You just dig out this information. Both transactions would be interstate. Even the invoice particular said you have to mention place of supply and place of delivery if place of delivery is different from the place of supply. So GST, interesting, no doubt about it. Interesting more when you start getting deep insight. It's like coming out with a pearl. Once you deep dive down inside the sea, come to my case study number next. I will discuss place of supply later. Please, I will not take a place of supply now. Sir, IGST I have said, and we have discussed these components when we have done the place of supply, since my topic is transition, but I have raised the important alarm for all of us together. Otherwise, it will take away my time. It's not like that. I'm willing to answer it. We can discuss offline. Let me complete my transition first. Coming to the important component of now job work. You are a principal manufacturer, or let me become principal manufacturer, and I have removed raw material to you, and you all are job worker for me. You must be having raw material lying with you on 1st July 2017, on which you will undertake the job work activity, and you are supposed to return it back in GST regime. Question will come whether GST applicable on such supply of raw material after undertaking job work activity. So this can be input, raw material, or semi-finished goods. Provision says when you supply, job worker supplying it back to a principal manufacturer, it is not supply and GST not applicable. Provided you should get back, principal should get back within a period of 6 months from the appointed date. That can further be extended by 2 months more with the commissioner approval. So 6 plus 2 months. So condition is condition. You should get back within the time frame. You say, no, I can't get back, your fault. If you're not getting back within 6 plus 2 months, meaning thereby principal has to then pay ITC, input tax credit avail. He has to reverse, and of which he will not get the credit when these raw material are being returned after 6 plus 2 months. So no choice left. We have to change as per the provision. So job work activity done. Coming to the next component, and which is very important provision, section 140 subsection 3. And what is this provision is saying? If you are a registered person in GST, but you are not supposed to take registration in existing law. So what could be the probable example? You are FSI manufacturer. Your turnover is less than 1.5 crore. But in GST you have to take registration because it is more than 20 lakh. So if you are SSI manufacturer, or second case could be a manufacturer of exempted goods or exempted service. When you are manufacturer of exempted goods and exempted services, then impliedly you have not availed credit. But now you are taxable in GST regime. Or you are undertaking works contract and construction services, and you are paying service tax under Rule 2A, service tax determination valuation rule, which is 40% or 70%. Or under abatement notification 26/2012. Then you have not availed credit on input, cement, iron, steel, central excise duty. Or you are a first stage dealer, second stage dealer, registered importer, or depot of manufacturer. So these guys are little worried. I'm a VAT dealer, but I'm not excise registered. I'm a VAT dealer, I'm not excise registered, but I may have 10 crore rupees stock on 1st July 2017. Post 1st July 2017, if I'm supplying such goods, I have to pay both CGST and SGST or IGST, which is sum total of both component. I have taken only VAT credit, and VAT credit carry forward as SGST. So this VAT dealer is asking, what happened? Will I not be getting credit of central excise duty component? I'm not excise registered. What section 140 subsection 3 says? If you are a dealer in VAT and you're not excise registered and you're having 10 crore rupees stock on 1st July 2017, you will be given credit of central excise duty component, and there are two component is being prescribed. The first component, I may have excisable cum tax invoices. I have availed the VAT credit, but I have not availed excise duty credit because I am not excise registered. In that case, provision says, Mr. Jain, you will be given credit of excise duty component. If you are having excisable invoices, and your invoices should not be older than 12 months preceding from the appointed date, 1st July 2017, meaning thereby your procurement must be on or after July 1, 2016. Condition, no choice left. It's a condition. Now you are going to use this stock for further taxable supply. So this is a very clear-cut case. Let's say your product is 18% taxable, and 18% need to be divided, 9% CGST and 9%. But you might have paid central excise duty 12.5%, for which you are having exciseable invoices. You'll be given full credit of 12.5%. Am I clear? Or if your product is 28% taxable, then CGST would be 14%. But credit would be available to the extent of 12.5%. This is what the first component. Second component further adds proviso. And what second component is saying? Second component is saying, in case I'm not having exciseable invoices. In case I'm not having exciseable invoices. In that case, whether the VAT dealer can get the credit, credit is available under the concept of deemed credit. Deemed credit. What is deemed credit? Provision says, Mr. Jain, you're a VAT dealer and I should not be manufacturer or service provider. I should be dealer. That's what. Because other than manufacturer or provider, I will get deemed credit of 40% of CGST liability. 40% of CGST liability if my product is chargeable under 5% or 12% GST rate. I will get 60% of my CGST liability if my product is taxable at the rate of 18% and 28%. And it's a cashback scheme. It's not like that you will get automatically. It's a cashback scheme. Meaning thereby, I have to first pay CGST liability, then only I will get the deemed credit of 40% and 60%. With another condition added, that I must sell the stock within a period of 6 months from the appointed date. So I have to sell my stock by 31st December 2017. So this is the provision. Now when this provision is stated to be, the question may come, whether the 1 year period procurement will continue even for the deemed credit. Answer is yes. With additional condition of 6 months to be sold, even for the deemed credit provision. Now under deemed credit, they have put one condition, two conditions rather, that deemed credit would be available if your product is not absolutely exempted or chargeable to nil rate of duty. To understand this practical provision, take example of textile. Textile as on date is not taxable, but post GST textile is chargeable at the rate of 5%. So maybe dealer would be having cotton fabrics on 1st July 2017, 10 crore rupees. He is not having exciseable invoices. And he has not paid the excise duty component. But his product would be chargeable to 5%, 2.5% CGST, 2.5% SGST. Question is being raised, can this VAT dealer take credit to the extent of 40% because his product is chargeable at the rate of 5% of CGST liability? Answer is yes, because textiles are exempted under conditional notification 30/2004, and law is saying it should not be absolutely exempted. So to that extent, we have to really go back and check. If it is absolutely exempted, section 5A, 1A, then no benefit, or nil rated, no benefit. Otherwise, credit would be available. So this provision is being stated. Now they have really brought concept of credit transfer document. And this is a credit transfer document. We have already said to the government authority, it is not going to work in GST regime. Thank you very much.